Welcome back to the second and final panel for today. And this panel will dive deeper into the important issue of addressing natural catastrophe or NatCat protection gaps, as I said earlier, a priority area of our work. And the IAIS has put considerable effort into escalating this issue in the global policy space. For example, through our 2023 Call to Action report, which highlighted that all supervisors have, either explicitly or implicitly, a basis for action to address these gaps, regardless of their specific mandate. And then, together with the OECD, we also contributed in 2024 to the G7 high-level framework for public-private insurance programs against natural hazards. And most recently, the IAIS has developed an input paper together with the World Bank for the G20 Sustainable Finance Working Group under the G20 presidency of South Africa. And this paper focuses on multi-party solutions to addressing NatCat insurance protection gaps and provides possible actions that can be taken by various stakeholders to address these gaps. The paper underscores the critical role of insurance in not only managing the physical risk and financial impacts of NatCat events, but also in supporting recovery efforts and promoting resilience, most importantly. And I think our work reflects the growing importance of this topic on the global policy agenda and our commitment to provide leadership on this issue. Lastly, to mention that we also look forward to an event on this topic in the sidelines of the G20 finance ministers and central bank governors meeting in South Africa, which will take place next week, where we will have an array of accomplished speakers and panelists, including Governor Andrew Bailey in his new capacity as chair of the FSB, and senior representative from the World Bank and Ministries of Finance. In the event that you are not going to be in the meeting itself, the event will be live streamed for those that are interested in tuning in, with the link available on the G20 website. With that, I now very much look forward to hearing from the distinguished panel, and I hand the floor to Petra Hielkema, IAIS Vice Chair and Chair of EIOPA, to take you through this. Over to you, Petra.
Yes, thank you, Jonathan. And hi, everyone. Good morning, good afternoon, good evening. Thank you for joining. Indeed, very important topic and relevant at every table at the globe, I would say. And therefore, I think even more important that we discuss it also today. I really have the honor to do that with a wonderful panel, and I'll briefly introduce them to you. First of all, I'm really pleased that we have the Honorable Minister Straughn on our panel. He's the Minister of Finance, Economic Affairs and Investment in Barbados, and he's also co-chairing the Global Shield Against Climate Risk. So welcome to him. Moreover, we have Niraj Verma, who is the Acting Global Director of Finance in the Finance Competitiveness and Investment Global Practice of the World Bank. We have Jérôme Haegeli, who is the Group Chief Economist and Head of Swiss Re Institute at Swiss Re. So welcome to you. And finally, but definitely not least, Kamal Kishore, Special Representative of the United Nations Secretary General for Disaster Risk Reduction. And it's really an honor to moderate a discussion with the four of you, because these 55 minutes we're going to talk about, I think, a key topic at the international level on how to protect individuals, cities, communities, societies to the impact that we see from weather events and other natural catastrophes. And it's a pleasure for me to do that with you. Now, Jonathan already referred to it. The IAIS worked on a paper for the G20, and we did not do that alone. We had the pleasure of doing that together with the World Bank. And so the first part of this panel will be a short outline of what was in the report, or what is in the report, by Niraj Verma. So I'll give him the floor first. After that, we'll have a round of discussion on what is the problem, what is the impact, what are the challenges, and then we will come back to the question, how can we deal with it? What are solutions? But let's first hear from Niraj and understand better what is in the report that was already, I think, announced, but is now out and will also be discussed next week. Floor is yours, Niraj.
Thank you, Petra and Jonathan, and thanks for having us on the panel today. It's a real great opportunity and a privilege to be with my esteemed colleagues on the panel on this really important topic. Also to say that we were very happy to partner with the IAIS to produce the G20 input paper that Jonathan and Petra had just referred to. I won't try to summarize the entire paper, but I hope that through the discussion, we will be able to bring out some of the messages that are there, and we also hope to bring it out in the public domain soon. But let me start and give an overview. I think clearly we have seen firsthand the devastating impact of NatCats on economies and communities. We also see the promise of insurance, but that hasn't been fully met, especially for the most vulnerable. If you see non-life premium to GDP in low-income countries, it's a level which is 1/4 that which we see in high-income countries. So there's a big gap. And to compound the issue, rising NatCat risks also increasing insurance costs, making insurance less affordable and thereby widening protection gaps. As such, access to appropriate and affordable insurance remains inadequate in many emerging economies, leaving billions without access to adequate financial protection. So what does the report kind of touch upon? I will focus on three broad messages and one on more solutions. I think firstly, we recognize that while insurance is a critical tool and it is underutilized, by itself, it cannot solve the NatCat insurance protection gap. And what we need also is investments in adaptation and resilience and risk reduction. And these are key to ensuring and addressing the insurability question. As such, broader risk reduction efforts, such as disaster-resistant building codes, enhanced infrastructure resilience, are equally critical to reducing vulnerabilities and expanding the insurability of unprotected assets. And this is often not as much a focus as it ought to be. So that was my first message, and integrating these with disaster risk financing strategies, including risk transfer mechanisms such as insurance, creates a more comprehensive approach to disaster risk management and financing. My second message from the paper is that while we outline a range of approaches that stakeholders can consider, it is, of course, important to consider that there is no one-size-fits-all solution. What works in India may not work in Brazil. What works in Kenya may not work in Indonesia. And we need to figure out how to adapt to local circumstances and context, fiscal capacity, cultural context, etc., and keep the message that what works in one country may not work in another. And lastly, on the big picture messages, I think countries need to understand the trade-offs between the different options that exist, including the role of public sector versus private market solutions, and considering possible unintended consequences like moral hazard. So this becomes a really important, again, not to blindly adopt solutions, but to adapt them and consider the trade-offs which exist, including fiscal trade-offs. Many of the solutions described in the paper require significant upfront investment by various stakeholders, including the government, and these investments should be weighed against the alternative of inaction, fiscal implications, and of course, other socio-economic and political factors. And my last message, more on the solution side, and I hope we can expand on this, is that implementing successful insurance-based solutions that address protection gaps will require certain key foundation steps. I won't delve into them, but building capacity to assess exposure to NatCat events and protection gaps, including addressing data and model challenges, is crucial. The supervisory and the regulatory frameworks and risk-based regulation and supervision becomes extremely critical. The issue of financial literacy and awareness of risk, and finally, incentivizing risk reduction. So let me pause here, Petra, and I'll be happy to expand on it through the discussion. Back to you.
Thank you. Thank you for, I think, very comprehensive. There is a need, but how do we look at solutions? I'll get back to what you said, but I think you gave a very clear summary of at least what the focus is of the report. Thank you for that. Before we go and continue to discuss solutions, let's go back to the problem. Let's ask, what are the key drivers and causes of net cat protection gaps in your region? You said it, no one size fits all. I can fully concur with that. Even within an EU, there are different needs in different member states, and that is the same worldwide. So I think we have a very large international audience, and I would like them to get involved. So here's a Slido that we want to show to you, asking you what you think, what are the key drivers and causes. And I'm going to ask the panelists, but then I'll come back to the Slido and hear from you what you think it is. But let me start first with the reinsurers who see a lot. Jérôme, zooming out, what are the main figures illustrating the stakes behind the protection gap? Can you say something on that? How do you see these gaps evolving in the short and medium term, and also looking broader globally, but definitely at the EMDs? What can you share?
Yeah, thank you very much, Petra. I'm very happy to do so. So first of all, I think let's keep, if you look at the facts and look at our data, our Sigma data, first of all, the global natural catastrophe resilience actually is rising. So on a global scale, you have more protection available against natural catastrophes. And if you look at our data, the global protection available actually increased about 10 percentage points in 2023, which is really a global data, and it's actually more than actually the protection needed by a few percentage points, almost 5 percentage points. So that's the good news, and it's a good news because actually, if you think about the assets that you need to protect, more and more expensive assets need to be protected. Climate change, urbanization, asset accumulation, all factors are contributing to the both frequency and severity of natural catastrophes, but it's absolutely the urbanization as asset accumulation, which is actually causing the rise in the natural catastrophes cost increases, which we do see, Petra, which we do see continuing at the trend growth of about 5 to 7%. So no change in terms of the trend growth. And if you then add on climate change and the likely increase in frequency, then the problem accumulates over time. But the first point was global natural catastrophes resilience is actually rising, which is, I think, is good news. However, if you dig deeper, and it was mentioned already by you, Nirai, and the report by the World Bank, definitely there are divergences with advanced economies making progress and emerging markets continuing to lag behind. So no change from that perspective if you look at the data. Third point is, if you zoom out again and if you look at Nat Cat protection gap, unfortunately, while progress is being made in protection being available, is the overlapping. There's still a majority of protection gaps which are not covered. That remains to be the case. Actually, about 3/4 of global exposures are not protected by insurers. And if you look at the difference between advanced economies and emerging markets, it's really mind-boggling. If you look at the differences, about 94% of emerging markets natural disasters is not covered. So more than 90%, and that ratio is about 60% for advanced market. So big differences. I think looking ahead, and we talked a little bit about the solutions. I won't go into too much detail, but let me just mention maybe 2 or 3 points, Petra, if you allow me. So number one, I think narrowing the protection gap, it requires all efforts, but it requires also structurally to lower the loss potential, while also being mindful, obviously, that you need to have the protection available, the increasing insurance, but there definitely is no one size fits all. But structurally lowering the loss potential, I think that is definitely something which also needs to be front and center. And with that, I just wanted to also emphasize, yes, the need and priority that should be given to avoid and reduce the losses. Because if you think about that, and that's my last point, if you look at the data and if you actually recognize that it's not climate change, but actually climate change is a contributing factor, but actually it's urbanization, asset accumulation, which is the root cause of the natural catastrophe increase and then also protection gaps. It's really important that with time passing and climate change seemingly not improving, that we need to put more priority into avoiding and reducing the losses, while also investing and supporting at the same time, investing into risk prevention, but also supporting all efforts in mitigating the risk in the first place. So let me leave it at this, and happy to come back later on. Thank you, Petra.
Yeah, thanks, Jérôme. And I think that's a nice bridge to Kamal, because Kamal, I mean, you work for the UN for disaster risk reduction, so reduction of the risk. I can imagine that you see a lot of these risks and the impact of these risks, economic impact, societal impact around the globe. Can you say a bit more on what is the impact of what we're seeing currently?
Thank you. Thank you very much, Petra. Before I respond to your question, I just want to share one good news. The good news is that decade on decade, mortality related to disasters is going down, and it's going down very significantly, 50% in some parts of the world, up to 94, 95%. Of course, we cannot declare victory there either, because that progress needs to be consolidated. You know, there are vulnerabilities, there are risks lurking in the global system of low frequency, high impact events, which could easily dampen this progress. So, but when it comes to the direct cause of disasters, it is increasing really exponentially. If we look at the first 2 decades of this century, the average loss annual is up to $200 billion. The same figure for the preceding decades was a third of that, price adjusted. So it's really escalating very rapidly, and it is not just the numbers in terms of dollar figures aggregated, but also number of people that are affected. Number of people that are getting affected is also rising very rapidly. People who are losing their homes, those who are losing their livelihoods. And if you add to these direct costs of what I said, $200 billion, the indirect costs, the productivity losses, the losses to ecosystem services, I think it all adds up to something like $2.3 trillion every year. So we are losing a lot to disasters. This is really a big problem, particularly for smaller economies where there is a disaster impact. It leads to debt. It leads to building back worse than it was before, and it's a downward spiral. I think if we have to arrest this downward spiral for these economies, it's really important that we have robust solutions, a full spectrum approach, as Neeraj was saying and Jérôme was saying earlier, that we have to look at insurance, but also we have to look at what are the measures we're going to implement to reduce the loss potential. There is no option but to reduce the loss potential. By 2030, for example, it is estimated that 500,000 houses in Australia will become uninsurable because risk is just so high. We are not building in the right place. We are not building in the right manner. And this is an advanced economy with pretty robust disaster risk governance systems. So it's really important that the way we structure insurance programs, they should really encourage investment in risk reduction. For example, if you're living in an earthquake-prone area and you are insuring your house, and next year you invest $10,000 in retrofitting that house, then your premium must come down. Otherwise, you're not creating incentives for investment in risk reduction. And another point, which is again a repetition of what Neeraj said earlier, that it's not one size fits all. We really need homegrown solutions for insurance which work in different contexts. There are examples in emerging markets where subnational entities have taken insurance, parametric insurance, and an event has occurred. It has just stayed below the threshold. So there is damage everywhere, but there is no payout because the threshold hasn't been met. I think it's really, really challenging because, in many emerging markets, the building standards are very uneven. There are many dozens of building types. It's very difficult to predict how, at the population scale, buildings will behave. And parametric insurance in those cases runs into some sort of a trouble. This is not a case that we should not pursue parametric insurance, but what I'm saying is that it really has to be set in the context where you're developing it. It really has to be rooted in the local context. In that space, I think what the insurance supervisors can do is a lot. They can really work towards developing fit-for-purpose solutions for such contexts. And looking forward to further conversation on this very important issue.
Yeah, thank you, Kamal. A call for solutions, for looking indeed in what we hear. Although I'm really happy to hear about what you started with by this reduction in loss of life. But I think even if life is not lost, many other damages can happen, and we just heard the numbers. So let me now go to Ryan Straughn and ask, as a co-chair of the Global Shield Against Climate Risks, can you share some examples of how you work and how your work provides and facilitates better pre-arranged protection against climate and disaster risk? So indeed, what are fit-for-purpose solutions, and what have you seen work in practice? And I need you to unmute yourself, Minister.
Thank you very much, Peter. Yes, thank you. So happy to be here to join in the discussion this morning. The work that we've been doing with the Global Shield, and as Barbados also shares the Climate Vulnerable Forum, the V20, we have been working with countries across the world to be able to identify the solutions clearly that would work for them. Now, we have put in place a mechanism, for example, to have pre-arranged financing with respect to multilateral banks, World Bank, IDB, at least in our region, and similar entities across the different regions, in order to provide immediate liquidity in the post-disaster environment. Under the Straughn initiative, as you know, Barbados has been championing very strongly the need for the inclusion of natural disaster clauses, climate resilient debt clauses, to be able to give countries, again, additional resources should the worst happen. But let me also say that we have been pushing countries to also develop their climate investment plans, which will speak to the investments required to deal with mitigation as well as adaptation. As a very clear sense to be able to mobilize not just what the public sector has to do, but equally what private sector investment is required in order to build resilience upfront, because we've all been clear. We do not want to experience a disaster to get debt relief or even to access these resources. The preference is to build resilience upfront such that when the disaster happens, there's as minimal disruption as possible. But let me just point out that clearly in Barbados here and in the Caribbean, and to the extent that the panelists have identified some of the challenges already, we are seeing not just the increasing frequency, but also the intensity. The damage that is being caused throughout the Caribbean region, which then leads into Florida, leads into Texas, and you're seeing the withdrawing of insurance solutions from those spaces. So to the point that was just made about persons investing in the Caribbean and being able to do the necessary retrofitting to make their homes and structures more resilient. The reality is that you're still operating in a risk pool. And if there are millions of properties being withdrawn from the insurance risk pool, even though we are trying to build the resilience within the Caribbean, the harsh reality is that within the context of the reinsurance market, less properties sharing the risk means then that ultimately there is still insurance premium, if you like, that still has to be covered. And therefore, that's something that we need to put our heads together to figure out how do we solve that issue, because we want to be able to mobilize domestic resources to put more into building resilience. And therefore, I think we need to be able to come up with creative solutions to be able to close that gap. Now, we have been, in the context of Barbados, we have been developing with the Insurance Development Forum, a public asset investment program, insurance program, sorry, because as we've built infrastructure in the past, we've never really particularly looked at the type of insurance that even government covers for its assets versus what is happening across the rest of the country. So in addition to that program, we have had some work done with the Inter-American Development Bank. We've developed a national coastal risk integrated platform, which identifies each risk to each structure across the island. And that tool is really going to allow us to be able to identify the type of mitigation and adaptation measures that will be required in order to address those issues long term. And therefore, when we say that we want to focus on building resilience, it is utilizing the data in terms of what we have to be able to develop those solutions. And we hope that we will be able to mobilize international resources to help scale and help us to be able to achieve this. And let me just end on this last point very quickly. As small states, I'm absolutely confident that we can find the financial engineering to bring to bear to these problems. Our challenge is not just with financing, but is also accessing the technologies that allow us to be able to build the resilience quickly. And therefore, as small states not requiring a lot within the context of a global environment, procurement or the size of our procurement is perhaps too small to attract the attention of the producers. But that is what is going to help us really drive the resilience building effort. And therefore, as we are able to focus more on how insurance can help, can be part of the solution for building resilience, I think we also need to focus on the fact that unless we have a dedicated access to the technologies in a specified time frame, that we are not going to be able to build the resilience as quickly as possible. But I think under the Global Shield and what we're doing with the B20, we are pushing countries to be able to, in advance of any disaster, put those arrangements in place, but equally start to build resilience immediately in order to minimize the impact of the disaster. I'll end there.
Thank you, Minister. Thank you very much. And it's also this combination, and I think it was very, very well said already by our first speaker, when he said disaster risk financing, that is resilience, and maybe if something happens to recover, but much more important, the resilience in combination with that adaptation. Both are very important. Definitely the resilience part, but resilience also needs financing and can meet a global scale. Thank you for that. Let's look at the Slido. Let's go back at the Slido and see what the audience said. Well, what are the key drivers? I think the first observation, I think we all can see that, is that many say it's the rising frequency and severity of the events resulting in increasing damages. It's a reality. I think that's the reality check, what we have to deal with. But then I think also below there we see the lack of risk awareness, financial literacy to get the products, the understanding of the products, maybe also the trust in the products. So here already, this is relevant for insurance, affordability of the products, and ultimately also regulatory barriers. So thanks for that input. By the way, if you want to ask a question to this wonderful panel at the end of the session, do share your questions in the chat. But let's go back to the panelists and let's now talk about those solutions and hear from you what you would think. Niraj clearly said that there's three things. The one I mentioned already, the resilience and the adaptation, but also there's no size that fits all, and all the speakers touched on that. And there is also a trade-off between the solutions you do and unintended consequences like moral hazard. And I'm first going to go back to Jérôme and ask you, Jérôme, representing on this panel the insurance, particularly reinsurance industry, what can you do to help deal with this risk?
Well, thanks a lot, Petra. What can we do to help the risk as a insurance or reinsurance industry in particular? Well, first of all, what is the role that the reinsurance industry plays in terms of mitigating and reducing the nat cat risk? And it's multidimensional. First of all, we put with the insurance premiums, and it's important that the insurance premiums are commensurate with the risk of the underlying insurance, because the insurance premium, they serve as signals of pricing the risk. So number one, we price the risk and we give the risk price. Number two, we transform the risk. So we obviously provide risk protection, underwrite the risk. With the underwriting the risk, you also can take on more the risk. So that's the risk protection. And number three, it's also a very important role that the insurance and reinsurance industry plays. We invest. We invest in the assets. We also serve as a long-term investors. I think it's really important that we keep this multidimensionality into mind in thinking about what is the role that the insurance or reinsurance industry plays. Now, coming to the solutions, what is the solution? What will be needed in terms of reducing and narrowing protection gaps? In order to narrow protection gaps, it's important that we have the good data, that we have modeling, which is state of the art. Obviously, there's many other parts needed as well. But let me just talk about the data modeling technology on top of that, and give you one example to illustrate why I chose data and modeling. Flood, and also close to Basel, close to Europe, floods is important risk driver for natural catastrophes. And floods, as you know, it was once viewed as uninsurable risk because you couldn't price it, because you didn't have a history on it, and because it's very local. However, there has been a lot of improvement on the tech front, a lot of improvement in terms of the modeling front, and now you have fully probabilistic flood models which allow the private insurance industry also to put a price tag on the risk. So data modeling is definitely very important for the future in order to provide the risk protection. Other than that, I think it's coming back to the other topics that was raised already, so I won't go into much detail. But as losses continue to grow, the priority must be given to avoid the loss and reduce the risk in the first place. And I just wanted to highlight again, Glenn, the benefit of adaptation efforts. If you look, and as an economist, it's a no-brainer. I think every $1 you spend on adaptation, it yields about $10 in benefits, according to the research that you look at. If you look at Swiss Re research and IMF research, it's close to 1 to 10. So structurally lowering loss potential brings down the cost of insurance coverage. With higher economic inflation, you have higher insurance prices as well. Adaptation, it will reduce loss potential, and it also allows affordability, allows the mitigation and the headwinds that you have in terms of insurance affordability. But maybe to close, Petra, and the key point, what we definitely need is a transparent and risk-based pricing system with a capital requirement which is commensurate to the system, and on top of that, let innovation allow also innovation to play its role in order to allow the protection gaps that we are seeing, which are increasing, which is a very definitely that these protection gaps also actually narrow. So it's multidimensional role that insurance play, but you also need multidimensional solutions in order to narrow protection gaps. Thank you.
Yeah, thank you, Jérôme. And I fully agree. It's not one actor in this ecosystem that can make the difference. It's a joint effort of coordinated action that we need, including, by the way, the supervisors. And with that, I just refer to the Slido question that is on the screen, where we actually ask you what you think we as supervisors could do. And then I look forward to your answers. We'll get back to that at the end of this round, because I'm going to ask the 3 other panelists as well on solutions. What can we do going forward? Maybe where will be the challenges? And I'll go back to Ryan Straughn and ask you, how can we ensure that financing mechanisms to combat losses for climate-related events are accessible and are equitable? And I do think you alluded to it already a bit, and also the challenges there, but would you like to say a bit more on that?
Yes, thanks again, Petra. Just 2 weeks ago, I spoke to our Caribbean Association of Insurance Regulators on this very particular topic, because on average, every year across the region, we have about 750 million US dollars or so in premiums. But on average, in any given year, there are only claims of roughly, on average, 250 million. Okay? Now, clearly, those resources are leaving the region, and therefore the focus on how do we recalibrate to ensure that we maintain, yes, an insurance relationship, but we use existing resources to actually help build the resilience and adaptation that we know that we need to do in order to ensure that the disruptions to people's lives, and certainly people dying, will be significantly reduced. And I think, as we've just seen, certainly with the Texas floods, that it is important to appreciate that while your built infrastructure needs to be maintained, not just put in place, but maintained to ensure that you can minimize the disruption. So I feel that within the context of the Caribbean, and working with regional governments and regional regulators, we have to devise solutions to genuinely mobilize some of the existing financial resources and deploy that aggressively in the context of countries having developed their climate investment plans, to be able to say these are the priority areas that we will implement over the course of a few years. That helps us to be able to ensure then that the very businesses and the investments that people are making remain insurable and investable, because at the end of the day, as small states, as my Prime Minister would say, if something isn't insurable, it's not investable. And therefore, even in the context of getting your economies to remain attractive, and I use the word attractive only from the perspective of both domestic investment as well as foreign investment, that the insurance bit has to be resolved. And I feel that that's a mechanism that we can put in place to in a sense, incentivize the adaptation and resilience. So the truth is, in our region, people have, and I think it was Kamal that raised the issue. People pay the premiums. An event happens, and it happened with Hurricane Elsa actually when they passed 3 years ago, and it doesn't meet the threshold for people to get a field from insurance. And I think we need to ensure that as we look at the problem in full, that the people who are actually paying insurance premiums year in, year out, that when something happens, there must be a mechanism that allows them to access the help that they need if we are going to maintain the public trust in the insurance sector. So I think, as I said earlier, I fundamentally believe that we can find the financial engineering to make this work, because we are sufficiently small that it can be done. But unless we get that in tandem with the access to the technologies to deploy quickly, then I think we may struggle. But I believe that this is something that, in the context of the Caribbean, we got with the other governments to be looking at to see how we can, in a sense, create something akin to a Caribbean captive to deploy some of those resources to actually build the resilience at the regional level. And I think that that's something that we will be pursuing in the coming months and a year or two to make sure that in the context of the region, that the financing for building resilience can come in part from some of the domestic resources whilst we mobilize at the international level as well. Thank you.
Thank you very much. And what I hear is that I hear a lot about possibility. I hear possibility. I hear resilience. But they need to finance that somehow, and at the same time, I also hear the need for the ask for if you pay your insurance premium, is that just for those cases where you need the payout, or is there a way to also use those funds to build the resilience so you actually have less damages, which is, I think, the thinking we need to go towards. To how do we use the finances? Now, I think others who step in after disaster are often public authorities. They say they reach out to the public, say we will come and help. That involves also real money, and can that money be better spent ex ante to build resilience? And here I of course am alluding to public-private partnerships to address the protection gap. And Niraj, can I come to you and ask you, are there examples of public-private partnerships that you can share that you would identify as good examples?
Thank you, Petra. And I think clearly public-private partnerships have emerged as a key strategy for closing the protection gap. I think Jonathan mentioned G7 high-level framework against natural hazards, which is gaining traction. So for us, I think if they are well designed and implemented, public-private insurance programs, or PPIPs, as we've been calling them, can be an important part of the solution to address NatCat protection gaps. But we have also seen misuse and inadequate outcomes, premium subsidy skimming, incentivizing, for instance, growing wrong crops that don't fit the agroclimatic conditions. So it needs to be done right. But if it is done right, it can be very powerful. And I'll come to a couple of examples. But before that, just to flag that these are most effective when they involve multi-stakeholder collaboration. As for these partnerships, we really need to leverage both the strengths of the public sector and the private sector. For instance, supervisors can provide the regulatory and supervisory oversight. And there was a question in Slido on that point. They can play a critical role on this one. Governments, international organizations, and multilateral banks such as us can provide financial and technical support and secure access to data and information, support market infrastructure. Private insurance obviously can bring their expertise in underwriting, risk assessment, and claims management, as we heard earlier. Now, PPIPs can take several forms, ranging from provision and sharing of data to joint efforts on preventive measures and cat risk insurance programs, involving risk sharing amongst private insurers and governments. So there are two examples I'd like to quickly cite. I think one is from Turkey, where the Turkish Catastrophic Insurance Pool, or TCIP, was established to increase protection against NatCats such as earthquakes. The government plays a critical role there. So again, on the point of multi-stakeholders, in providing a financial guarantee and building the conditions for insurers to thrive, compete, and collaborate. Private insurers use their capital, expertise, and systems to provide insurance, sharing risk together to increase their ability to protect households and businesses. The pool now insures more than 50% of the population and demonstrated its efficiency after much needed payouts after the very terrible earthquake in 2023. Similarly, in Morocco, the World Bank helped develop a dual program that built on market-based insurance and solidarity principles to protect both insured and uninsured households against disasters. And it covered insured households by extending protection in all property insurance policies to include NatCat risk, while protecting uninsured households through a solidarity fund. And following again the earthquake, the Al Haus earthquake in 2023, the fund paid out roughly 300 million, out of which 275 came from international reinsurance markets. again, illustrating the link between public and private and financial markets on this point. So let me pause there, but these are two great examples from our countries.
Thank you, Niraj. And just speaking a bit from my part of the world, what we also saw is in the flooding of Valencia that there is a public-private partnership. And here, not only the financing was organized, but actually reaching out to the public was done by following the insurance channel. So it was back from the central level through the brokers to the consumers to make sure that they would be compensated for their losses as soon as possible. Yeah, then I'll go to Kamal and also ask you in this context, particularly I would like positive examples, but have you seen positive examples that could inspire us thinking about how to address these issues to take home?
Thank you very much for that, Petra. First of all, let me say that the input paper that IAIS and the World Bank have prepared, particularly the aspect of incentivizing risk reduction through the right kind of design of insurance instruments, is really something which resonates with us. About 6 weeks ago, we launched a global assessment report on disaster risk reduction. It has several case studies of where it has worked really well. For example, in Colombia, insurance for earthquakes to poor households, but structured properly, has increased adherence to building codes and communities themselves building safer houses in the first place, because that's, insurance is linked to a certain minimum level of earthquake safety. So it can really work like that. We also have a partnership with the Insurance Development Forum, where we are working in Argentina and working with municipalities there to see how the premiums would work out with or without risk reduction measures. So I think when we bring both of these things together, I think we can create solutions which are more sustainable, more workable. We have a partnership with the UN Capital Development Fund, working in some Pacific Island countries on looking at how we can actually spur the local insurance industry, how we can come up with bundled insurance which looks at catastrophic risk but also everyday risk, so that people actually begin to see benefits of buying insurance relatively soon. So I think some imagination is required there as well. My final pitch is that, earlier today, Jérôme talked about probabilistic risk assessments. I think it would be great if probabilistic risk assessments or risk matrix became more widely available, produced at multiple levels, national level, subnational level, sometimes even local level, so that people begin to understand in a bit more intuitive way what risk is when you begin to quantify it, and what is the role of risk reduction and risk transfer in addressing this. For very long, this whole area has been very specialized and largely stayed with the insurance industry. It's now time to democratize some of this risk analytics. Thank you.
Thank you, Kamal. And again, also here on the assessment of risk, how do you identify them? How can you do that more together? What I do now is actually I want to refer to some of the questions that are asked, and I thank you for those who asked the question. And I'm first going to stay with statistics, but maybe slightly on and with you, Kamal, but maybe not per se on this, but going back to your first comment that has triggered some interest, but also from Jan Bauer, who's asking the question. He's from the US supervisors, the NAIC, and he's asking, could you please share additional details about the statistic that mortality from NatCat events has fallen about 50%? And could you maybe be more specific on particular types of NatCat events? So does it include hurricanes, tsunamis, earthquakes? Could you say something more on that? You need to unmute yourself, sorry, and start again.
So if you use 2005 to 2015 as the baseline period and look at the subsequent years, 2015 to 2025 as the measurement year, in most parts of the world, mortality is down by 50%. And this includes principal hydrometeorological hazards such as floods, such as cyclones, such as coastal, all different kinds of floods, cyclones, droughts, although droughts have never had many direct mortality in any case, but also principal geophysical hazards such as earthquakes and tsunamis. So I can give you a specific listing of these hazards, but mostly natural hazards, both hydrometeorological and geophysical. So in some parts of the world, for some hazards, the mortality has gone down significantly. Mortality risk has also gone down. For example, if you live in a cyclone-prone area, the chances of dying now compared to 15 years ago, global average, is a third of what it was 15 years ago. So big progress, but it comes with a few qualifiers. The first qualifier is that for some of these hazards, and here I have to underline extreme heat, it is entirely possible that we are undercounting the deaths because attribution is a very tricky problem there. So I think I would put a big circle around that. But for many other hazards, there is undeniably significant reduction in mortality.
Thank you, and I fully appreciate the part what you say about heat, and I think we underestimate possibly the impact that heat has on health and casualties. So I have one more question, and then I also close the floor because we're almost going towards the end of time. But I have a question from Dave Snyder, who is from the Property and Casualty Insurers, and I'm looking at the panel who would like to take the question. Is there someone who can say a bit more about the role of microinsurance and parametric insurance and risk-based pricing, and how could that work in dealing with this issue?
I'm happy to do so, Petra. Microinsurance, super important. Parametric insurance, super important. Nothing new to the insurance industry. Microinsurance, especially for developing countries, it's a central pillar in providing access to insurance products, and parametric insurance, which is insurance products linked with predefined triggers. It also allows quick payment, cash payments, and triggers the insurance to be activated very quickly, which is also very positive, I think, for the households, corporates, or society at large, because you get the benefit of the insurance exactly when you need it, when disaster strikes. So yes, I think both product features, parametric insurance as well as micro insurance, are features which are very popular in respective for respective perils, risks, or then regions of the world. Yeah, thank you for having mentioned that.
Thank you for and again, and I think that's what we started with, and what Niraj also said is that any solution can also have an unintended consequence, and we did allude that parametric insurance is very efficient and quick, and I think it's how you know what risk you're covering, and at the same time, if an event just not triggers the right trigger, there's a lot of damage. I know. So there's always the pros and the cons. I think they came out today, but I think what stood out today mostly is that it takes an ecosystem to work on this. It takes not only between government and insurers and cities and individuals to mitigate, adapt, and address the issue and find financing strategies. It takes a global effort to help each other in different regions, because that is in the end also how you diversify risk, and how global finance can support the parts of the world that need it. A lot of food for thought there. Thank you very much. I did not forget that this is in the end a global seminar of the insurance community, and I want to go back then and to close it off, just seeing what you gave as feedback on the question, what should supervisors do? What actions should supervisors take, and here it is. First of all, assessing the insurance protection gap. I think many of us do. Is there a gap? What is it? We can give credible information, advise governments, industry on the solutions. That's the number two, including public-private partnerships, which again, for me, public-private partnership is so much more than having some money ready when something has happened, but it has to be about the public and private working together to build resilience, to create awareness, and to enable people to address the risks that are there. Here it is, incentivizing the risk reduction, therefore, is a third, which I think comes very close, and then improving literacy and risk awareness and supporting the development of innovative products, finally creating and implementing a risk-based and proportionate supervisory system. Thank you for that feedback. We will take that at heart while we continue to work on it together with you. Thank you for all the feedback. Clearly, 55 minutes to address such an important topic is way too little, but I do think we got as much out of it as we can, thanks to a great panel. So I want to thank the panelists. Thank you, Niraj. Thank you, Jérôme. Thank you, Kamal. And thank you, Commissioner Straughn, for being in the panel and sharing your insights. And then with that, I'm going to give the floor back to Jonathan.
Thank you, Petra, and let me add my thanks to an excellent panel of experts and to you for this very important discussion, which certainly I think left us with food for thought as we come to the end of this year's Global Seminar. Also food for thought about moving into action. And I think you'll hear more from the IAIS on that in the period ahead. So with that, I'd like to extend a heartfelt thanks to all of you for participating, asking questions, engaging us over the past 3 days. This really provides significant value to our work and hopefully gives you some very good insight into what will be keeping us busy in the period ahead.